The state of the U.S. economy, inflation, interest rates, and government spending. In this video, we will discuss the recent developments in the U.S. economy, including inflation, interest rates, and government spending. These topics have significant implications for the financial well-being of Americans and the overall state of the economy. Let's dive into the details. Inflation and its impact. Inflation refers to the rate at which prices of goods and services increase over time. High inflation can lead to financial hardships for individuals and negatively impact the economy. The U.S. Federal Reserve, FED, is committed to bringing inflation down to its target rate of 2%. However, recent reports indicate that prices, including rent, energy, food, and gas, continue to rise. This has resulted in negative real wage growth for many Americans, as pay raises have not kept up with inflation. Interest rates and the federal fund rate. The federal fund rate is the cost for banks to borrow money from each other. The Fed recently announced that it would keep the interest rate unchanged. This decision has led to a rally in the stock market, as it provides investors with an incentive to invest in stocks rather than bonds. Lower interest rates can also lead to an increase in bond prices, making them an attractive investment option. Government spending and debt. The U.S. government spending has been a cause for concern, as it continues to borrow money to fund its expenses. The national debt has reached record highs, and the government's borrowing is expected to continue in the coming months. This excessive spending has led to the need for higher interest rates to attract bond buyers. However, high interest rates can stifle innovation and negatively impact the stock market. The 60-40 principle and its challenges. The 60-40 principle, which suggests investing 60% in stocks and 40% in bonds, has faced challenges in recent times. The principle aims to balance the volatility of stocks and bonds, but it had its worst year in generations. This can be attributed to the Fed's quantitative tightening, where it sells off treasury bonds and mortgage-backed securities to combat inflation. This has led to a decline in bond prices and increased borrowing costs. Conclusion. The U.S. economy is facing several challenges, including high inflation, interest rates, and government spending. These factors have implications for individuals, investors, and the overall health of the economy. It is crucial to monitor these developments and understand their potential impact on personal finances and investment decisions. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.